Welcome back to the show this morning. It is 6:34 as we kind of get things underway. You know, it's interesting. The ultra rich saying that they should pay more in taxes. In a recent letter to the Democrats, and this was a post on Medium that came out on Sunday, a group of 18 ultra rich billionaires, including George Soros, Chris Hughes, who's one of the founders of Facebook, Abigail Disney, one of the heiresses to the Disney fortune, Molly Munger, who you look for a second, it's like, hey, I think I know that name. Yep, she's the daughter of Berkshire Hathaway. So, you know, Charlie Munger, of course, that's his daughter.
Charlie, yes.
Yeah. They're arguing that taxing the richest 1/10 of the richest 1% is not only fair, it's vital for the country. Of course, this is on the back of Elizabeth Warren talking about a tax on the ultra rich. She wants to tax the top 75,000 richest people in the United States. And basically, that's going to create $1 trillion in revenue over a decade. Man, have we heard this stuff before. But here's the real question, or the real issue, right? If you're George Soros, or Abigail Disney, or Chris Hughes, or any of these individuals, and you feel like that you should be paying more in tax, do it. You know, it's interesting. It's great talk, right? And you get headlines for it. And it's like, yeah, the rich are out there. You know, they want to pay more in taxes. Nothing's stopping you from paying more in taxes. If you have a hankering, right, when you're filling out your tax form at the end of the year and you have a hankering that you want to give the government some more money, the IRS will accept any and all donations without question. They will not call you up and say, "Oh, I'm so sorry, you overpaid your taxes." If you write it on your check and you want to mail them money, say, "Hey, I'm sending you a check for $1 million. Keep it. Apply it to the U.S. Treasury." They will be more than happy to take your money from you. They don't have a problem with it. They don't mind it. Right? But the reality is and it's just, and this is the hypocrisy of the whole thing, which is that Warren Buffett's been fighting a tax bill like $1 billion for like a decade, right? So if you really believe you should pay more in taxes, pay more in taxes, right? It's fine. If you want to donate to the government, donate to the government. Nothing's going to stop you. You can certainly do that. But again, this is all about headlines. This is all about, you know, anything else. So, and ultimately what happens here, and look, I can tell you this from personal experience, while this all sounds great on the surface, it doesn't work. And I've tried to explain this to people before because I have personal experience with this. I got started in the financial business, managing money, started at a bank, wound up working overseas. And what was my job overseas? My job was to manage money outside of France. Why? France has a very high tax rate, and then you add on a value-added tax on top of that. And the richest individuals in France, they do not keep their money in France. They keep it outside of France so they can avoid the taxes. And what happens is that you have a flow of capital outside of high tax areas into lower tax areas. So if you want to pay higher taxes, you can certainly pay higher taxes. But once you impose a tax system on the rich and require them to pay more taxes, and by the way, let's just get some facts out of the way. 84% of all the tax revenue collected in the U.S. is paid by the top 10% of taxpayers. Okay. So, you know, the rich are already paying, quote unquote, their fair share. You may not like the tax system. You may not like having to pay taxes if you're in the middle class. You may not want to pay taxes if you're in the lower income class. But the majority of the taxes are paid by the top 10 to 20% of the entire country, right? So that's where the majority of the tax revenue comes from. And look, we can get into whole arguments about who pays the most in terms of percentages, which is a big fallacy because, you know, at the end of the day, it's what do I actually pay in taxes. The bottom 40% of Americans actually have a negative tax rate. So, because they get credits back from the government for child tax credits, et cetera. So they actually have a negative tax rate. So bottom 40% pay nothing or actually get money back from the government. The remaining 60% pay 100% of all the taxes. The bulk of those taxes are paid by the top 10 and 20%. So do the rich pay their fair share? Yes, they do. But if they want to pay more, fine, pay more. But I can tell you from personal experience that once you impose a tax rate on the wealthy, they don't leave the country. You know, this is one of the big misnomers. It's like, well, just if they don't like it, just tell them to leave. Well, that's fine. You can certainly tell them to leave. But remember, these people are really rich because of a couple of things. They employ a whole lot of people. The majority of people that have a lot of money, they generally create the jobs for those that have a job in a lot of cases. When you're talking about them paying more in taxes, they don't have to leave the country, but their capital can leave the country. See, capital flows very easily across borders, across continents, across markets. Capital flow is very, very easy to do. And this is what I used to do for a living, which was to invest capital outside of France into other areas to mitigate tax. That's what I did. Understanding that is what I'm telling you, is that once your tax rate reaches a point to where people go, I can move my capital to Venezuela, not Venezuela, that'd be a bad choice, Costa Rica. Yeah, that would work. Chile, pick a country, right? I can move my capital there, hold it in the bank. I can make investments in it. And that's the great thing about it's the great thing. It was also the bad thing about technology. I can be anywhere and invest in anything through a variety of apps and software applications. I don't have to go to a brokerage firm anymore. I don't have to meet with my advisor face to face. I can do it all online. I can be anywhere in the world and manage my money. I can buy real estate. I can do whatever I want to do, a lot of it right online. This has made the flow of capital even easier to do. When I was doing this back in the early 90s, it was much more difficult because you didn't have the ability to move capital as easily as you do today electronically. But it was still doable. So we always have to think about the consequences. And again, the people yelling for more taxes from the rich, pitchforks and torches, I certainly get it's the feeling of oppression, right? It's we're not seeing real wage growth. Yes, we've seen wages tick up a bit, but wages are about the same as they were back in the late 1990s. Cost of living has gone up tremendously since then. So you can certainly understand the poor are feeling poor. The rich are obviously richer. A big chunk of the wealth of the country is held by the top 20% of the country. You talk about stock market wealth. It's great. Financial markets are going up. That bypasses about 80% of the country. 80% of the country doesn't really have any investments whatsoever. So a rising and falling stock market means nothing to them. They're living paycheck to paycheck, and pretty much for the most part, any real changes in prices affects them because discretionary income for them hasn't risen much in the course of the last few years. If you're at the top end of the spectrum and you're investing in the markets and you're listening to a financial show because you've probably got money invested in the markets, congratulations. You're one of the very top. If you've got $1 million in the bank right now, you're in the top 5% of the country. Congratulations. So, it's interesting. But again, when the rich start coming out and talking about how they should pay more in taxes, well, there's nothing that's stopping them. But talk is cheap. If you really want to impress me, write a check. Be right back after the break. Don't go away.
Lance Roberts' blog. It's required reading for the informed investor. Catch it today on LanceRobertsShow.com.